In today's video, we're going to be having a look at the RBA and how they've changed their forecasting methods. We're also going to have a look at what's going on with oil prices right now and a little bit of a talk on the rest of the central banks and how they are now looking at moving towards scenario-based forecasting instead. Hello and welcome to another acysecurities market update. My name is Alistair Schultz and I'm going to be a host through today's trading journey. Now, what we've found so far with COVID-19 in terms of the global cases is that it's gone above 4.1 million infections globally. We have more than 285,000 deaths so far, with the US having more than 80,000 of those. Plus, we've also got 1.4 million people, a little bit over in fact, who have so far recovered. Hopefully we do see these recovery rates rise, especially as we are going to start exiting lockdowns across the globe right now. But in further news about viruses and a little bit of an update on that side of things is Wuhan and South Korea have reported some new localized infections. In Wuhan, it is only a small number and the people were asymptomatic previously. So it will be interesting to see if there's any more information that comes out of China on that front. As far as South Korea, they're reporting that in Seoul they've had a breakout occur at a bar, and they are now tracking down about 5,500 people to try and contain and make sure that it doesn't have another second wave sort of an outbreak occur. But beyond that, we have some other things sort of occurring. Italy has reported that they have the fewest cases for a single day that they've had since the lockdowns began. Russia is now the new hub of COVID-19 for Europe, and we're seeing France, Switzerland, and Greece start to ease their lockdowns. So hopefully we do see some more lockdowns easing and the economy starting to rebuild quite soon. Now, moving on from that, we have got some news from the RBA. Now, the RBA has obviously talked about the three-stage lockdown process that has been implemented into Australia. Now, they're looking at easing them and they have some forecasted expectations. Now, they're expecting that by the time we get past or through the third stage of lockdowns, which they're aiming for about July, but that's tentative to say the least, they're expecting that there could be a 60% rise in Australian GDP in comparison to what's happened right now. Now, in reality, this is not going to be a standalone. They are moving to a different way of forecasting things with a bit more predictive nature. And they do have at current the idea that right now we're going to be, for the first half of this year, down at least 10% for our GDP in Australia. And there is likely going to be a 10% unemployment rate as well to go with it. So we will have to wait and see what actually happens and get some real data figures in before we can make an accurate assessment. Now, the next thing to sort of have a look at is about oil. Now, obviously, we've had quite a weird year with oil, with prices going negative and a variety of other factors that have all revolved around from the supply and demand sides, with one side taking a hit or a shock to the system, being that there was an increase of supply during a price war, whilst also getting demand shocks via the fact that we've had COVID-19 going around the globe. So what we're seeing now is that the Saudis have agreed to cut a further 1 million barrels per day, and they're looking at also having the UAE and Kuwait also have cuts as well. This is on top of the already OPEC plus agreement of cuts for barrels of oil. So hopefully this will mean that it will start to see the demand start to rise and obviously the supply starting to cut. Now, what we do see in the moving forward is, and what we're seeing right now, is really that Saudi Arabia has retreated from the price war that they started several months ago. So hopefully we do see those oil prices rise, we do see those futures contracts start to come up so that theoretically the spot prices will as well. Now, moving on from that, central banks, I'm talking about central banks globally, are migrating their way about how they actually forecast what might be happening around the globe with their economies. Now, in the past, they've used some pretty simple measures to get estimates and do the calculations. But because of the COVID-19 pandemic and the way that it's sort of rolled out, we have to sort of start thinking about the upside, the downside, and what the baseline might be. So central banks are now moving towards a scenario modeling sort of projections as opposed to taking the actual data and using what they have. The idea here being is that they can give an absolute maximum and an absolute worst case scenario in each of these sort of eventualities. What they're looking at right now is that the worst case scenario is that we have a second wave of infections around the globe and we see much more lockdowns to occur. Hopefully that's not the case, but that is the worst case scenario. The baseline is that it sort of continues on the path that it is right now, And a really good example is where we would see a vaccine developed and a few other things along the way to help the treatment of COVID-19 and hopefully eradicate the virus altogether. Now, those sort of things are that we're going to have to be a look at. We're going to have to be careful about how we think about scenario projections because, quite frankly, they aren't accurate data. They're simply a projection of what might happen. So based off that idea, we have a variety of very different scenarios that we could anticipate. But the bank's really only going to be looking at doing with about 3. Now, for the news ahead, we didn't have much news yesterday. It's been a bit of a quiet day today as well. The biggest things that I can see on there is that we're going to have US CPI figures coming out for both the core and the normal. And we're hoping that we're going to see some good data out of that, but the chances are very unlikely. Obviously, we've had some pretty nasty appointment data for unemployment in the last week, and what Steve Mnuchin has said is that the real unemployment rate, whilst it might be 14.7%, he believes it is closer to 25%, and that the next lot of earnings seasons and the next quarter are likely to be worse than this one. So let's keep that in mind when we're going about our trading day, and hopefully we'll be able to find some good opportunities to make some money along the way. Now, if you have any questions about some of the stuff I've covered today or perhaps some of my other videos, feel free to shoot me an email at talktoal@acy.com. And of course, like and subscribe the video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.